Well, Baba Kalyani's defense bet is starting to take shape today. The Kalyani Group signed a joint venture agreement with Israel's Rafael Advanced Systems for a 700 crore rupee contract to supply missile kits to the Indian Army and Air Force. Speaking at the sidelines of the event, Kalyani was candid enough to admit that government has been slow with big defense contracts. He went on to say that the group should turn its focus on the bread and butter auto business and address the current demand concerns. Take a look.
See, that's the beauty of this business. If you focus on a product and you create a facility to assemble a product, and if you don't get that order, then you can't do anything else. If you focus on a process and creating process-related technologies, then if you don't get that order, you can do many other things. And that's exactly what we are doing. And that is our strength. That, you create the capability to understand the process, the technology, and with that you can make many other products.
From a point of view of a defense contractor, however, what is your view on the progress that the government has made on these big ticket announcements? We mentioned Spike. There's the FICV project also, where we've not heard an update for some time, and the general consensus is that the government takes a lot of time for big orders while smaller orders keep coming in. Would you agree with this, and what do you think the government can do to better that?
Yes, a lot of time has elapsed for any big contracts to come in, but that's the way the defense systems work all over the world. It's not nothing special about it in India. Okay, I think everybody was on a euphoria that suddenly some big orders are going to fall and everybody's lapsed. It never happens that way. I think you need to create capabilities, you need to create facilities, you need to create products, they need to get tested, the user has to test it. This cycle is a long cycle, it's not a short cycle. And I think if you look at it from that perspective, and that we started only 6 years ago in getting the private sector into the defense system. There was no private sector into defense manufacturing 6 years ago. We started 6 years ago, we have made some tremendous progress. The policies are in place, the government's direction is in place. Okay, we are not a country with unlimited means at our disposal. We have limited means in terms of resources, and therefore resource allocation also plays a role in terms of how much money you're spending on defense and how much money you're spending on other sectors of the economy. So to that extent there is some limitations. Okay, but I think by and large we are doing quite well.
You mentioned government, Spencer. From a Kalyani Group perspective, there's slowdown in the auto sector. Does this mean that you focus more on defense, or anyway are you expecting defense to be a much bigger part of the pie going forward?
Well, even if I want to focus on defense, that doesn't mean I'm going to get more defense orders. That has its own time cycle. As far as the slowdown in auto sector is concerned, I think I need to focus more on the auto sector rather than something else, because that's our bread and butter business. Okay, so we have to find ways and means of what more we can do in the auto sector to overcome the effects of this slowdown.
One last question. We saw the budget coming, not a lot of big bang announcements for either auto or for defense. Was this something that you expected to see in the budget? Are you a bit disappointed? What's your view on that?
I didn't expect, what big bang announcements are you going to see? There was a big bang announcement of where the economy needs to go. So I think you have to draw your own conclusions based on what the government is saying in its economic survey, and where the expenditure is going to take place, and therefore how can you be part of that process?
Well, that's Baba Kalyani saying that need to focus on the bread and butter auto business, and defense, of course, continues to be an interest, but need to watch out for what's happening with the core business. Now, India's long-term consumption story is still intact, and that's the word in from Singapore-based Temasek, which has invested over $11 billion into the country. Temasek's India head, Ravi Lambah, is hot on consumption stocks despite the current slowdown. Speaking to Nisha Podar, Lambah listed out sectors where Temasek could potentially ramp up its India investments.
This hasn't been a great year in terms of optically putting out a return rate for you for Temasek, because from 12% returns in the last year, you're now sharply down to 1.49%, largely on account of listed stocks that you're invested in?
Yes, I think you know our numbers well. So look, we mark to market our portfolio once a year, and a substantial part of our portfolio is listed. And we saw, over the last 1 year, we saw equity values fall in equity markets globally. So we were affected like any other equity market holder of securities. So whether it's 12% 1 year, 1.49% the other year, we do not really look at our performance on a short-term basis. We are long-term oriented as an investor. We look at our long-term performance. And if you think about the last 15 years, we've had a 15% annual total shareholder return. So that's how we think about it. And short-term market volatility is not something we are concerned with.
Right.
We have the ability to we want to invest long. We want to generate returns over the long term in a sustainable manner, and therefore short-term volatility doesn't trouble us as much.
So last year you had been net divestor rather than investor as well overall. So when it comes to the India strategy, how have you really performed in the last year? Have you made more investments than exits in the last year? And what will be the future trajectory for you?
So globally we sold more than we bought last year because of the point I made earlier, where we were moderating our pace of investments. In India, we are at a record high now. We are at $11 billion of exposure in India. We are at 5% of the total portfolio of Temasek, which is also a record high. And we have been investing over $1 billion a year for the last 6 years now. And so net we grew in India last year. We were 4% last year. We were about $10 billion. This year we are 11 and 5%.
You have big investments in some of the big companies like banks, big banks like Axis Bank, ICICI Bank, HDFC Bank, and you have been holding on to them while they went through their worst already. What is your view on these banks?
I think we see the banks as a proxy to economic growth in the country. We've always looked at it that way. When we started investing here 15 years ago, and this is our 15th year of being in India, by the way, we were in banks and we saw them as proxies. We continue to invest in them because they're still a very good proxy for the Indian economy.
Are there other sectors which you're keen on?
We like consumption a lot, and consumption plays into many different sectors that we like. So banks and insurance, like you talked about, there's consumer, there's retail, there's technology, which can be broken up into consumer internet, into sharing economy, into fintech, healthcare. Services is something we like a lot as well. So across the chain, infrastructure as well. I mean, there are parts of infrastructure that are very entirely driven by consumption. So all of that is very interesting to us, especially in the Indian context.
All right. So you've talked about a very broad basket of consumption, but looking at the key consumption companies and key consumption sector right now, that's going through a turbulent time right now. Do you think the valuations would be cheap for an investor to look into it, because especially when you said that it's short-term in nature in your view?
I think the fact that valuations may have corrected does not necessarily mean they're cheap. I think we have to look at we have to reevaluate. How does that business position itself in the competitive environment it is in? Because when one business loses, someone else possibly wins. Competitively, things change. Then you got to think about how management is tackling the situation they're in. You got to think about how the financial markets are thinking about it. So I think a drop in valuation is one data point, but there are other data points too.
Well, that's Temasek's India view. $11 billion invested, still likes the consumption story for the long term. Now, speaking of the stock markets, former SEBI chief UK Sinha welcomed the government's move to hike public shareholding limit in listed companies to 35% from the current 25%, with at least a dozen PSUs yet to even comply with the 25% limit. Sinha did add a word of caution that this move will need more time to bear out. Take a look.
Minimum public shareholding of 25% was there on the statute since 2001. And every 2 or 3 years, there was a demand from the industry to extend the timeline, and it got extended. So in 2012, SEBI took a very conscious decision that it has to be implemented in 12 months period, no extension. But SEBI also did another thing, that earlier the openings or the avenues for extending the minimum public shareholding were very limited. So those avenues were expanded. And I remember Mr. Haldia organizing a conference of ASSOCHAM in Delhi on this issue. And almost 90% of the people in the room were very skeptical that whether at all it is going to be implemented. But SEBI was able to do that. Not only that, on the very next day, within 24 hours, those companies which didn't implement it, they were penalized. The enforcement action started. Having said that, I would like to also mention that SEBI could not do it for public sector undertakings. And that is one regret I have, because the legal position is that rules are framed by the government, and under SCRR, government framed a rule that they would be having some extra time for this. Over a period of time, those timelines have been expanded. So if you ask me about 35%, my feeling is that it will take its own time, and it should take its own time, because 25 to 35 is a good move, but it's a big jump. So we should provide a reasonable time frame for doing that. And my second comment is that government should lead in this. The capital market rules should be agnostic to who is the main promoter or the main shareholder. Irrespective of that, rules should apply equally to everybody. Only then it can be implemented.
Well, both important points that are being made by the former SEBI chiefs, that the move from 25 to 35% in terms of public float will need to be given adequate time so that it's not market disruptive. And secondly, that this must apply to government companies as well. As we already pointed out, that there are several companies within the PSUs that still don't meet the 25% public float norm. So there's the former SEBI chief saying that the rules must be agnostic of shareholding. With that, it is time for us to wrap up this special edition of the Newsmakers. Before we go, we leave you with HDFC Bank's Aditya Puri when he was thrown a curveball about Vijay Mallya and Nirav Modi. Thanks for watching.
Nirav Modi, Vijay Mallya, both are your, I'll not call bum chum, but pretty close friends, I'm told. Yes, they are his friends. How could you say no to them? I'm sure they came to you and seeking money. How did you avoid them?
No, Mallya is not my friend.
Okay. Okay. Nirav Modi is.
Nirav Modi is not my friend. But okay. I'll tell you, if somebody in Mallya's office heard you, he would tell you, every time the call came from me, wo Mallya gaali deta tha. Chor ka, his blood pressure would go up. So, friendship and banking is not correlated.
Okay. Okay, sir. You answer.
If you're a bad risk, you're a bad risk. So you can be my good friend. Seresh told you that, na? You can be my good friend. I can give you coffee and send you away.
Not money.
Just for your information, they did come to me for a loan, and I gave them coffee, and I told them about the world, and I said I would consider the loan. And then I said, Paresh turned it down as far as Mallya is concerned, and he knows what happened.
Okay.